Welcome back to The Long and the Short, presented by TradeStation. TradeStation is a leading fintech company providing an award-winning trading and investing experience with support, education, and tools to help you navigate the markets.
Now, markets may have pulled back from all-time highs in recent weeks, but stocks overall are still in an 8-year bull market since the lows of the financial crisis in March 2009. Joining us now to discuss how investors should be looking at these current trends is Scott Redler, Chief Strategic Officer for T3Live.com. Thanks for joining us, Scott.
Thanks for having me, guys.
Now, you say one of the most important things that investors should be looking at is the time frame for investing. So what are you seeing right now in terms of trends for long-term versus short-term investment decisions?
I think that's why people have mistakes in the market. They forget or they don't know what time frame they're on. Like if you're at 20 to 28 and you want to invest in the market, you should be hoping that we have some type of corrective phase. You should be hoping for even, I hate to say, like a financial type crisis like you had in 2008, because if they're putting monthly flows in, if they're at work and they have a 401k, that'll help their average cost. Right. Anyone that invested, $1 before the tech bubble burst or before the financial crisis and they kept going, they're doing quite well with their average cost. But if you trade actively, like some of us do for cash flow and P&L and for a living, you have to be careful with shorter term trends. So I like to watch the 8 and the 21 day moves to pull back, reduce some risk, because if in the 8th year of a bull run, we actually have a real corrective phase, not just 3% like we just saw. You want to be flexible. You don't want to be caught. You want to be able to take advantage of lower prices. So for right now, yesterday we put a low in, at 24.17, which was 3% off the highs from that chart at 24.90. So that was a spot that some buyers stepped in. So now short term, if we bounce and they reject that 21 day at 24.60, maybe we could make a lower low and get a 5% correction or a 7% correction. So right now, active traders are on their toes, trying to be flexible just in case.
Let's talk about Apple, too. This is one stock that has done it very well this year and over the course of the past 12 months or so. Of course, part of the major indexes. We have it up here, and we are loading the moving averages to speak to the short and long-term trends as well here. We're just waiting for those moving averages to pop up. But speak to us about Apple. There we got the trend lines and what you're seeing and what this tells you about the market.
Now, we see a lot of headlines on how investing is dead and how it's rigged against you. But, if you put $10,000 in Apple on the first iPhone, it would be worth $100,000, or $1,000, it'll be $10,000. So what you want to do is you want to find the most innovative companies, and obviously Apple's been around for a long time. I personally still think it's investable. And as far as short-term technicals, it just reported earnings, it responded well, and it's above its gap. So in active trader land, as long as Apple holds 155 to 156, I think that it's going to be hard for a bigger corrective phase in tech. And then if that does hold, as soon as the market rally resumes, it'll probably be the first one to make new highs, and I think it could see 180, 200, in the month and the year ahead.
Now, what about Tesla? What can we learn from the market about, from this stock about the market, particularly when we think about them joining the big three in automakers this year, which is a huge momentum shift, especially in that industry too?
Well, I have an 8-year-old son, and I have a feeling he will never drive a gasoline car. And you would say 99% of the headlines are about Tesla, and they only have 1% of the overall electric vehicle market.
Right.
So at this point, yes, it's a high valuation, but they said the same thing about Amazon 7 years ago, and when they were not making a profit, and that went to 1,000. So I think if you're investing for the long term and you're younger, this is something you could start investing in and stay with. And if they do deliver, which I think Elon Musk will, I do think long term it'll be a great investment. And short term technicals, if it could hold just say above 300, 320, it'll be hard for the tech sector to take a bigger corrective phase. So we're watching that on an active basis.
And here too we have the chart showing this 8, 21 and 50-day moving average, specifically speaking, Scott, to the points that you just made here. Let's also pull up Netflix. I'm going to do this in real time here, and we'll get this going too. What do you make of Netflix? We were just talking about one of the biggest shows on there, right? Ozark, and then of course this new Weed series actually debuting on Friday for Netflix. And so in terms of the chart of Netflix and what you're seeing in terms of the trend lines, what does this tell you?
Well, short term, we like to be in Netflix when it's above the 8 and the 21-day moving average. Makes it easier to hold for active guys. But right now it's testing that. I would say longer term, I still love it. I still think that, again, going back to my 8-year-old, he doesn't even really watch a TV set anymore. It's all shows on the iPad. My wife's in bed watching Orange is the New Black. They're innovative. The market cap is still under 100 billion. So I do still think that long term is an investment. I think it's worthy, and also short term actively, it's been reacting well this year. I'd like to see it get back above the 8 and 21 day to actively look better, but all in all, I still think it's acting well. And that level on Netflix, if we look here at the chart, I think that 165-ish area is a level that I'd love to see hold, considering it just pulled back from 190. So not a bad spot to dip your toe in and buy the dip.
Absolutely, and when you think about stocks that a lot of millennials are interested in, Snapchat, of course, driving a lot of volume on the day of IPO. Netflix, another one of those big names, and Tesla and Apple, of course, all securities that we're mentioning here today. When you think about Netflix, what really gets me excited is that we'll continue to see some of that volume. And again, it's a narrative in the markets where people are saying you've got to get in on the dips. And just as you mentioned, this is one of those pullback areas.
Well, Scott, unfortunately, we're so tight on time, so we got to let you go. But just speaking to this chart here, I mean, the charts definitely tell the story.
Yes, charts do measure price and time, and they can't lie to you as long as you learn how to read them.
Definitely.
Perfect. All right, Scott Redler, Chief Strategic Officer for T3Live.com. Thanks again.
Thanks for having me.
Thanks.
All right, that's going to do it for this week's episode of The Long and the Short. We'll be back next Tuesday at 9:30 a.m. Eastern Time for the next show, but do not go anywhere because the opening bell continues after the break.